Buying one or two properties residential, you're never going to get rich. It's just not going to happen. Now imagine every day we burnt 100 kilos of gold, every day, and we stopped mining for gold. That's farmland. It has outperformed every other property class there is. Better than commercial, better than retail, better than Resi, better than anything else. Again, not crazy. So you've just turned a $5 million purchase with income to $20 million in 15, relatively risk-free. Whether we like it or not, the houses are coming.
Like I introduced myself and Andrew both. Look, I'm in real estate industry since 23 years, so 13 years in India and the rest in Australia. So with the long experience, we all busy here to build a portfolio across all the sectors like residential, commercial, industrial, and farming. Farming is my passion, my own interest. That's why I started working on it back in 2022. And we find out the property for me, for my close syndicate, that's how it started. And in terms of real estate industry, I learned everything from Andrew here because I started my career early here in Australia with Andrew. He's very experienced, like more than 22 years in real estate industry and consulting at least 6 medium to large scale developer in Sydney. So he's consulting some of councils as well for their plans like development control plans, how for rezoning and stuff. So today we not talk about those things. So rather than, I don't want to say too much, rather Andrew will talk about that. So please, Andrew.
Thanks, Alpesh. So as Alpesh said, we've got a long history in property, and FarmInvest is for everyone, but specifically for anybody who likes property, likes investing, and has realised that by buying one or two properties residential, you're never going to get rich. It's just not going to happen. And so you've got to have a diversified portfolio, and that includes commercial, but also residential, and also Agri. Now, what's the problem normally with Agri is where does the holding cost come from? How do we sustain having a large parcel of land without potential income? So we've worked on that, and we've set up a dedicated structure and company which specialises in finding agricultural land. And so we've gone through, myself and Alpesh, and a bit about our background. And Alpesh owns farms, I own farms, so we practice what we preach. In terms of why consider agricultural land, there's a few different reasons, but the main reason is they're not making more of it. It's not something that they're making more of. And if anything, when you look at what is happening with population growth, it is expanding into farmland. Okay, so we're actually losing the farmland at a time where population growth globally is putting more demand on what farmland produces, be it meat, be it grains, be it anything. So those two things combined, we all know what's happened with gold of late. Now imagine every day we burnt 100 kilos of gold, every day, and we stopped mining for gold. That's farmland, because we're chewing up farmland and there's more and more demand for it, and you can't create more of it. So that's probably the main summary of why looking at farmland. There's other reasons, because you want to diversify your portfolio, and I think more than ever we've seen the Australian market doesn't operate in a consistent swing across Queensland, Western Australia, Tasmania. So you want to have a diverse portfolio, because then you've got diverse income, and then you've also got different drivers in terms of population growth, which I mentioned for consumption, but there's other income protection that you can have with farms and benefits if you structure it right. So there was a really good documentary from the ABC just under a year ago on farmland and values and what's going on. So throughout the presentation, we've got little snippets of that. Afterwards, if you want me to send you the whole thing, no worries, but there's always just a little bit to complement what we're talking about.
This is Bellarine Peninsula, on the coastal play west of Melbourne, one of the fastest growing lifestyle regions in the country, where influx of people is putting pressure on the land use and land prices.
So yes, there are pressures. I think we're safe for a little while, and we certainly love living here, and we love the peace and tranquility of it. But it's just reality. The houses are coming.
That is not just coastal regions, but across much of Australia.
So that goes back to what I'm saying. What she said was, houses are coming. Whether we like it or not, the houses are coming. Whether we like it or not, the houses are coming. So as the houses come, you can imagine the value of that farmland, and we've seen it in southwest Sydney, what's happened there. But then whatever the next farms were an hour away, all of a sudden now become so much closer to major services and cities. So as you've got that urban sprawl, you're always going to have pressure on land. So the other thing to understand is there's different types of farms. So they're not all the same, yeah? So, and then depending on the farm type, there's different things that make them successful.
I can talk on this.
Yeah.
The different types of farms, like mainly grazing farms, like Australia's biggest part, like if someone asked me, a lot of people ask me, with water and without water, yeah? Look, 95% farms in Australia has rainwater only. So they're relying on rain. They don't have a water licenses or water usage capacity then. So the grazing land are mostly all the grazing farms, you see, those totally rely on rain. That's the first segment. Then dry cropping land. Dry cropping land means just relying on rain. They have a 5 to 6 month season, and they just rely on rain. They're 200 mm to 1000 mm rainfall areas, and the yield for wheat, barley, canola, or lentils accordingly they're gonna get, and prices also accordingly. After that, you see cropping land, but with the water. So with the connected with the channels, they get a water licenses, etc. And the fourth, after that, the one more, you go horticultures, where you got a fruit, almonds, almond orchards, or maybe pistachio orchards, all the fruits you see here, including mangoes and everything. So these are the types of farms are mainly in Australia, you can see, where there's so many broad acres, like 500 acres to 10,000 acres farm you can see in one place. Okay.
Yeah. So again, that comes back down to research. You know, if you want to do a certain activity, is the soil suitable? Is the history of rainfall suitable? So, like anything with property, data is always important, but probably with farmland, it's more important because there's different cycles. The same way with normal property, we've got our cycles. Farmlands have cycles when it comes to rainfall. And there's also cycles where you find now a lot of areas have aging farmers. So when the farmers start to get older, maybe they can't run 500 head of cattle anymore. So they start to run 200. Maybe they can't fix the fences all the time. Maybe they can't do the machinery. So those farms, as they start to produce less, there's an opportunity there to go in and buy them at good value. Because all you then have to do is get an operator in to operate it at maximum capacity, and there is a correlation between the value of your farm and the value of what it produces. Okay, so it's important to understand those elements.
There are many things that determine the value of the farmland, Of course, location remains a primary factor, but there are things like the fertility of the soil, how productive that soil is, and what it can grow, and how profitably, access to market, access to water, and things like climate. And we're not just talking rainfall, but also reliability of that rainfall.
So again, when we're looking at that data, we're looking at a history. And we're not just looking at the last year or two, we're looking at a longer period of time. So in terms of the other reason that we really decided to focus on the farmland is if you look at how it's performed historically, it has outperformed every other property class there is. Better than commercial, better than retail, better than Resi, better than anything else. And we think if you're a sophisticated investor, you understand what it is you're trying to achieve, then this is a really good way to put your money into something that's going to have real growth, in terms of long-term growth. So that's just something, we can share this with you, but you can see in terms of the next best asset class was Sydney industrial warehouses. Then after that, Sydney commercial. But number one was the Agri. If you look at, for an example, some areas in Victoria over the last 20 years had an 800% increase. That's huge, Alpesh, you've studied this. Do you want to?
I'll talk on this.
Yeah.
I think I sent these details to everyone who are attending the seminar today, if I'm not wrong. Maybe go have a look at that as well. But how to read these? Look, the top 100 assets by rise in value over 20 years. It does mean we talk about our capital gain. So everyone comes in, what's the capital gain, isn't it? Why are we investing in the housing or anywhere for the capital gain, isn't it? So people are buying 1, 2, 3, 4, 5, 10 houses for the capital gain, for the retirement plans. So that's the important. Now have a look there. Where you find out the residential here, in this side of the page. 49 number, there is a first added housing average annual median. That's 175% in last 20 years. First 6 areas, all agriculture. After that, the industrial. Then again agriculture, then industrial. The farm where we bought it, and we'll show after that, you can see where I bought a farm that's called South Australia. You see a number, Arable Land and York Peninsula farmland. It's also 286% in the last 20 years. So it's data driven we're talking. This is the data, what happened already in last 20 years between 2004 to 2023. That's the Australian Property Institute data. And it surplus not only asset class called Resi or commercial, it's also surplus gold, S&P, ASX, inflation, everything. So this is very important. When I see this, even before that I made my mind, but when I see this, we want to focus more, and we want our clients getting the farmlands. Because as I said, we're busy building our clients' portfolio. So we want to give them a right advice. If someone comes to me, I'm not against the residential. We're also selling residential, commercial. But we need to know actually what's your goal. Why you want to do this? You know what I mean? We will talk about our capital gain and stuff later on, but this is something, a very important factor, if that makes sense for everyone. If someone not understanding this, we will sit personally for that. Okay? Thank you.
Thanks, Alpesh. So
we track the data each year and produce the report, which does look back 29 years, and around 280,000 transactions have happened over that period of time. But it really has taken off in the last 5 years, very strong. When you look at the number of transactions that happen, there's certainly those larger institutional type of investors who might have been buying or selling, but it's really been dominated by the family farms, and in most parts of the country as well. In the past decade, outperformed both the Australian Stock Exchange and residential housing market. We look at ASX across the last 10 years, so as share markets moved at just on 3.6% per annum versus agriculture land at 11.6%, we've seen residential property prices at 4.1% versus agricultural land 11.6%. So it is an asset class in its own right, pretty strong around the country, really.
We were talking about the values in terms of, hey, Ryan, that's why I was messaging you, just checking because part of what we do is we've got to make sure you can get the money for it too. So Ryan's part of the funding solution. So we've got to make sure that we do that research. We know that the farmland is very strong in terms of what it can achieve. We know the future potential is there, but we know that we can structure it in a way where you can get in, there's an income, and you're comfortable and safe. So in terms of acquisition categories, there's sort of three categories. The first category is what we call like an entry level, where you might only say, listen, I've got 300 grand sitting in my super and I don't know what else to do with it, but I'm comfortable with farmland. I don't want to do anything with anyone else, so just buy something and in 20 years, whatever it is, you know? And so we make sure that we've got those types of farms as well from that entry level, where a lot of the people we do talk to want to use their super fund to invest. The second category is where you go a little bit larger and the property itself may have either a couple of titles already, so there's more than one title already, or there's the potential to subdivide into smaller lots. And again, you might have a capacity there to say, I want to grab this because whilst right now it doesn't make sense to turn 1,000 acres into 10 100-acre lots, as the cities continue to expand in 15 years, maybe there'd be a strong demand for 100-acre lots closer to the cities expanding. So that's sort of a second category. The third category is now when we're starting to look at larger farms, maybe that are actually already producing a lot. So wineries that are producing. So one of the farms we visited with Alpesh near sort of south of the Panola, isn't it? Yeah. This is where they make all the wines. Penfolds is there and so forth. Anyway, the guy's got a winery on the front section of the farm. He had another section with sheep. He had another section with cows. But that's a $5 million farm. It's 200 hectares. And you can currently subdivide it into 5-hectare lots. So it's producing a lot of income already. So you can get a decent rent return. But you're probably, 55 minutes from Mount Gambier? So you're less than an hour from Mount Gambier. Mount Gambier is a 30,000 plus town. It's the largest regional town of South Australia. There's a lot of timber and ports and a whole range of stuff. So remember we talked about one of the features is logistics as well, So to think that in 15 years, you'll be able to cut that up into 5-hectare lots is not crazy at all. And don't think 200, 5, okay, I'm going to get 40 lots. It doesn't work like that because you've got limitations on roads and a whole other range of stuff. But to get 20 lots on that is not crazy. And in 15 years, to get $1 million on each one is, again, not crazy. So you've just turned a $5 million purchase with income to $20 million in 15, relatively risk-free, because the demand on what that land can do is not going to go away, okay? So that's, and that sometimes those opportunities we need to syndicate. So you might say, look, I'm okay for that opportunity to go in with 2 or 3 other people and put $500,000 each. Depends on, everyone's different, but there's something for everyone. When we talk about syndicates, we don't get to the stage where it's big enough to need a financial services license. We don't want to do that. We want to work with sophisticated investors who understand and move forward. Basically, in terms of the fundamentals, is we want to find something that can generate an income. Now, unless you're in that entry level where you say, look, it's at a point where I've got the money sitting there anyway, it is what it is. But normally, once we get to stage 2 or 3, it's got to have an income. If it doesn't have an income, the burden of carrying it is too much and it's not smart. You don't want to limit yourself in other things you can do. You don't want to put all your eggs in one basket for anything. So the income side of it's really, really important. To do anything, rainfall patterns, water security, That's part of the fundamentals. Now, just because you have water or access to water doesn't mean you can get water. You know, you've got to, there's ballots on who can actually get water. There's a whole range. So it is complex as an area. So we want to remove that complexity. We want to say we understand that market and we've identified the risks there, and we want to de-risk it for the investors who say, hey, I'm interested in buying some farmland. Case study 2, I'll get Alpesh, because we've actually got some of the people involved with these to give a little bit on their experience, because it's one thing me talking about it, but it's something else hearing from someone who's actually done it.
So I'll give you a little bit background to do behind this. I think Kiran, same like me, migrant from India, like he been here like 15 years?
Yep.
Yeah. Has a 2 beautiful son, wife. His IT background, IT consultant. So he has a widespread portfolio across residential, commercial, and farming together. And me and Kiran and other mats, we bought our first farm together as well. But I'm talking after that in 2025, this farm they have acquired. So we'll talk about that as well. And so some of questions so you get an answer, your answers you will find out here, because the same board, he was there 2 years ago, 3 years ago, okay? So the first question for Kiran, before, we acquired a farm, the second farm for him, the $300 an acre with 5 years plus 5 years lease. And that lease is predominantly more than 5% a net lease per year, okay? The outgoings paid by the lessee, we'll talk about that later on, like what's outgoing and stuff like that. But the important question is not that what he got, what was the price he got, what's the deal he got, that's not important. That deals is always there, yeah? When we find out. So important thing is what was the mindset. So I want to ask the first question to Kiran. The first time when you heard the idea of acquiring a farmland in Australia, coming from India, 6, 7, 10 years, what was your mindset and what was the core motivation behind that? So that's the important thing, isn't it? Everyone now feeling the same things. What was the mindset and what is the motivation behind that?
Yeah.
Please.
Good evening, everyone. Like back in India, like my grandfather is like a farmer, and in India, in the generations goes, the land is being divided, and normally getting like 100 acres of land is like a dream. When I came here in Australia, I can see there is a big piece of land people are selling, but we don't know like how to buy. Normally we knows how we can buy the properties or residential properties, but for acquiring a like farming land, we don't know at all. So that is a one thing, and on top of that, like Alpesh came with some ideas that we can buy a farmland as well, and that's how we started the thoughts. The same time, I have residential properties, but it is also a good idea to diversify your portfolio with the farming land as well. And the bigger motive is like you can have a stable lease or those things. So at least compared to the residential, for a long run perspective, farming land is also good to have it in your portfolio.
Okay. So this is emotional motivation. There's most of people, I do have, like I said, like, look, my own names back in my country, I hardly have a 1 acre. After so many people on that 712, what do you call it? So I thought like to have 100 acres even is a good achievement, yeah? There's a sense of achievement. Everyone loves land. I don't think so anyone doesn't love here, yeah? Because we're not producing land, we're producing houses. So, and every year we are losing 1.5% arable lands in the world as per the United Nations data. And we increasing population, isn't it? So that's, the motivation was clear for everyone. The second for you, Kiran, like when we structure this deal, 5 plus 5 years lease and $300 an acre price, what role, like important things, like I have done this everything for you and your partners. So what do you feel about this deal and how I negotiated, what have we done? So you feel like, oh, this is something you achieve, you know what I mean? Like it's not something you find out online and you buy it straight away. So is this how I structure that deal? If you can share with the people.
Yeah, so when first time when Alpesh came with this idea that this is a piece of land and we can buy it. So first of all, like for me, the bigger question is how we can arrange for the finance and those things. On the same time, vendor obviously asks for more money. So sometimes we need to negotiate and put in them in a bracket as well. So he has done the bit of hard negotiation. The same time, how we can buy it, whether with our own name or a syndicate with the companies, and how we can structure coming together all the people. Then obviously if you have a company, then you need to arrange for the finance with the broker as well. So those things almost he has done all hard works for us, and all the questions are ready for us to just to say or take the final decisions, where we will have a ballpark calculations where how much cost it is gonna be, total acquiring cost, those things like brokerage, how long it is gonna take to get the approval. If it is like multiple people in the company, then how much like time it is gonna take. They might take extra due diligence as well. So almost all the hard work, Alpesh has put it in the place, and he also run on behalf of us as well, and he just help us to achieve that.
So look, that farm particularly, it's not always you're gonna get these deals. Imagine what we've done here. The farm hasn't been in operation since 4-5 years. Farmer's aging. He wanna sell his farm, but he can't sell the farm as operational farm. So I find out the lessee who wanna lease that farm. So that is important thing here. So I asked him, do you wanna lease this? He said, yeah, I can lease this. And he make that farm as actual farm within a year, after spending a lot of time and money on his machineries. So when we acquired this farm, at $300 an acre roughly, the actual price for the farmland in that area is $500 to $550 per acre. So I know about this, like when it is in operations, you can straight away go for valuation, you get a higher money. There's no brainer in it. Okay. So third question is important, like look, after acquiring 2 farms, both in syndicates, one is 4 people syndicate, second is 11 people syndicates. I know one syndicate I'm managing that. But how you think now in terms of long term, like 20 years for your long term goals, is this how you think about these decisions? Like you have all other things as well, but how you think about this decision?
Yeah, for the residential properties, it is like you can have many of hustles as well, but in the farming land, it is bit of peace of mind, because you know the 5+5 kind of lease is there in the place. All the outgoing is paid by the leases, so for you just getting the rent. Hardly like 4 or 5 entries in the year. So for a management perspective also it is easy and very less hassle. You just need to keep eye on that, whether the lease is paying the money on time or not.
So do you manage this farm by yourself or any real estate agent managing?
No, I am helping by managing by myself, especially help of Alpesh. He has done all the hard work. I learn from him, as and when I get stuck, I ask him, and he just help to manage. Normally residential will ask for 5 to 10% in middle, right? So when you are acquiring by managing by yourself, at least you are saving that extra as well.
So generally in regional area, if everyone aware, they're charging 7 to 8%, isn't it? Even housing. So in farms as well. But believe me, like it's not brainer. Like what do you have to do? Like it's insurance has been covered by the lessee. So I don't think so. You need someone to manage there. I know. Still, you have to do some works. We can teach that. The final questions, Look, it is easy to acquire and hold a farmland in Australia. Look, now, how you feel it is easy or hard? And regarding management, we already spoke. Because most of people here, maybe all the first generation migrants and some of second generation migrants, what do you want to say? Because I heard these things, oh, it's so far, it's too hard, don't know, they don't have any idea about a pricing and stuff like that. They think like, oh, I asked this question randomly, what do you think about a farmland pricing? Some people told me 100,000 an acre, 50,000 an acre, because they have still the similar mindset from where they come from, So how you think about that, like how easy or difficult, or what do you think to acquire a farmland?
Yeah, comparatively, buying a property in Australia is a bit easy because they got the structured way of doing the transactions. And especially people like Alpesh, he has done all the like due diligence, hard work, and all the structured approach we'll take. At that time, it is really easy to acquire the property. And yeah.
Yeah, thank you, Kiran. Thanks for your time. Yeah, look, I'll answer everyone, but that's it. That's it for you. Thanks, man. Thank you. There, yeah. Recently, we acquired a farm for one of my clients, and client is here. Tanga, please come. Okay, look, I'll give some background of Tanga as well. Tanga, working in IT with government, beautiful wife and two beautiful daughters, and very hardworking person. And I think we met first time in 2023 because of a common friend. At that time, he didn't make a decision because he want to buy his own. He don't want to be part of Syndicate. Okay, that's how most of the people, yeah. Some people doesn't like syndicates. Syndicate is definitely headache. it's not an issue. And then he came to me in 2025 and he said like, look, I want to buy a farm. So I said, okay, let's go with that. So we acquired for him 543 acres, an hour and 20 minutes from Adelaide CBD and airport. A square block with the two titles, and it's a same dry cropping land, have a town water connected. So that's the deal we got with the 5 years lease at 5%. Okay, and I think he just settled in December last year. Okay, and the rent is always in advance for a quarter. So that's the structure as always I offer my clients. Let's see how Tanga's feeling now, because that's amazing strategy when we bought this farm. We're buying a farm for now, and imagine what he's like he's thinking a long term after 20 years even. So yeah, the first question for Tanga is, Tanga, you have made this purchase as a part of your long-term planning. How do you see this 550 acres farm impacting your financial future over the next 2 decades?
First of all, thank you to Alpesh and Andrew for helping us getting through the settlement last December. It is a bit longer journey. We made it done. Obviously, land is a tangible asset. It's about how you want to structure your portfolio. I always feel like I want to own a land in Australia. It's because of the route that we come from. When it is a land, it is a lot of opportunity. That's how you see it. It's not like a house. Sometimes it grows, sometimes it may not. But land has a lot of potential opportunity for us to grow. You can subdivide, and there are so many other things we could do. So that's what my mindset. Not sure about 20 years, but at least for a decade, I had a plan. I'm not going to do anything for that land. I just want to keep it as it is. I just want to get that grow. So, that's what my plan. Yeah.
Thank you. What was the biggest motivation behind this to acquire a farmland for a longer term, as you said to me?
Again, it is because of the route. I mean, obviously, we got a farming background, and my father is still doing a farming. I know a bit of farming, interest as well. Australia is really a big country. You have a lot of agriculture happening, but not everybody knows what is happening there. But last 2 years, I've been researching and doing my own thing, like how we could buy a farming land. I wasn't sure how I could do it, but somehow I came to know about your helping through people with your network and other things. Obviously, when I met first time, we are not in a position to get that going. Then we dropped a plan. In last year, we had a plan, then we executed it.
A lot of people thinking you need millions of dollars to acquire a farmland in Australia. Most of people think like that. So how you, look, that's the main question. Yeah, everyone maybe has, needed 5, 6, 7 million, then you can do this. So what do you want to say to the people that you actually can buy a farm with a few $100s per acre?
Yeah, true. So you could go from, from, as you guys mentioned on the slide, that you could go from 300 to 30 million or 50 million. It doesn't matter, right? So you could, yeah, there are range of available farming lands and different type of lands available in Australia. It's about your mindset and your plan. What type of land you want to buy it? Yeah, so there is always something.
So why you didn't buy by yourself searching online, realestate.com and domain, which is, I'm telling everyone, man, we're not selling here farms. So we're buying for our clients as an acquisition consultant, as a facilitator. So when someone asks me 3-4 questions on that side, I'm literally telling everyone, even I told you as well, you can buy by yourself, search realestate.com.au and you find out. So why you didn't go to REA and domain and farm buy and hire us? That's a simple question.
Yeah, so when I was doing my research, I think one of other person, Kiran, was mentioning there is a structured process for a residential property. There is not much hidden information. You could pretty much go with the flow, you can buy it. But with the farming, what I understand, there are multiple factors involved. Like leasing is one of the prime factor. That has to be there for our loan, as well as how you want to structure your loan, and the solicitor is another important part. And for the leasing side, it is not easy to get a lessee. It happens through people with a good network, like Alpesh. So when you put them in the real estate website for lease, you may have to wait for 3 months or 4 months to get it if you don't have a proper network. So that's how I found it in the last 2 years research. Obviously we were lucky to get that one. Yeah.
You covered leasing part. Look, leasing is a long term here. So if someone made a commitment, it's a commercial lease. It's not like a residential. Anyone can walk away. So when the commercial lease means if someone want to default it, they have to be bankrupt. So it's not hard, it's not easy to find out. But when you find out, they for long term, like 5 plus 5 plus 5. I got a one lease, 5 plus 5 plus 5. It does mean after 5 years that lessee has a right to refuse first. That's how the structure is. So if you are, let's say your lease is 5 years, example. At the end of 4th year, you know that it's a 1 year left. So you can ask your lessee, okay, do you want to stay with this? Or I'm planning outside. So 1 year is enough, isn't it? Look, you count 10 years residential when you find at least 6 month vacate positions. If I'm not wrong, Andrew, you also own apartments. 10 out of 10 years, not possible. Nowhere, no property, isn't it? If someone very proactive, yeah, you might achieve, but not possible anywhere. So look, thanks Tanga, and look, we will talk after presentation in Q&A. But thanks for your support, man.
Thank you, Andrew and Alpesh. Yeah, thank you.
So I'll use this opportunity because we've also got after this some of the current farms that we're researching into, but because we touched on the financing side of it, I think it's important to understand that that's a big part of the puzzle, yeah? So we've got one part is the property and the features and attributes of the property. Another component then is the lease, getting the lease in place. And we've worked really hard to build a network of farmers who sometimes they're coming to us now and they're saying to us, hey, I want this farm. I want this farm. If you can, because think about it from a farmer's point of view. Either I've got to put 800,000 of my money into the land or into my business. Because as we said, the land prices are no longer cheap. And the farmers are saying, I'll get a better return on my business and I can only own and infrastructure so many farms myself. But if I can lease the farms and expand my network, I can make more money because my cost of sale and my average operational cost plateaus. So it's a whole network. The final piece is the finance. And I'm going to call Ryan up here from Lending Association. So I'll let him introduce Lending Association and what they do, but they've been pretty critical in terms of helping our clients get the right finance. You know, there's finance and then there's the right finance. The right finance is basically you putting in as little money as possible with the minimal documentation. Now, that doesn't mean 0 and 0, but the least. But I'll let Ryan introduce.
Yes, hi, thank you very much for having me. Yeah, so Lending Association, we've been around 15 years actually. Tomorrow is the 15th birthday. So we have close to 100 staff, 8 offices up and down the east coast of Australia, equipped across every type of lending, home lending, commercial lending. Some of our more experienced bankers.
I'll move you into the light.
Oh, into here, sorry.
So you're not a shadow.
Money shot. But yes, we do have our own agriculture division called AgFin, and they do everything from the machinery to the purchase of the farms. But I think our secret power is some of our really commercial, experienced commercial brokers who can actually get things through the banks on, you know, different little policy twists and bending the rules, as they say, a little bit. So yeah, that's Lending Association.
I think so. So I've known the company from day one because the owner's a good friend of mine, and that's not why we use them. It's because they are literally the largest privately owned lender. So you got mortgage, you got Yellow Brick Road, all those guys. They've all sold out. But in terms of individual, and what are you guys hitting?
I want to say something.
Yeah.
Because look, there are a lot many of my friends are mortgage brokers here. They're my clients. Some of mortgage brokers are my partners in one of the syndicate. So it's not something we just promoting someone. Just telling you, I use 11 mortgage broker for my first farm, and you know how you're using, like you know someone and you're using. They all didn't achieve anything, and then luckily from Lending Association I got a guy, your team, Harry, he helped us.
Yeah,
and
Harry's
believe
amazing.
me, everyone told me you're gonna have to pay 10%, 11%. If I'm not wrong, everyone heard this, yeah? 11% even Tanga, yeah? Everyone did. So I said, oh, man, what's gonna do? What are we doing here? And luckily I got the same rate as I got a residential investment
Yeah,
property.
that's amazing.
It's unbelievable.
Yeah.
Yeah. So have you hit 4 billion a year? Like, are you close to?
So, yeah, 4 billion in loans
that's-
settled a year.
That's
probably
so.
30
What that
billion.
does is it gives you the ability to go to certain lenders and say, "Hey, can you look at this deal?" And so that's the reason we like working very close with lending associations. So as you mentioned, Ryan, there's different options.
Yes,
So,
very much so.
so if you want to go big, they've got a dedicated Agri finance. So that business is Charlie heading that up?
Charlie, yeah.
Yeah,
It's nice.
yeah. So that's traditional. Then because of the lease, if you want to just talk quickly on the lease stock loans,
lease
like
stock. Oh, I used to love writing these as a commercial broker. It's got to be the best product out there. And so what the lender is only focusing on is the lease income. So he's not digging into your financials, your pay slips, what you had for dinner last night. Some, banks go crazy digging into so much documentation. They literally just want to hit a ICR covenant. So they're looking at, 1.5. So that's if the mortgage repayments on the farm is, say, let's just use a clean number like 10,000. They're wanting that rental income coming from the farm to be 15 grand. So it's just covering it 1.5 times. But as more players came into the market with commercial lease stock, they started dropping it to 1.25, 1. Like it was, so they were all seeing how popular it was, and people were jumping on lease stocks. They're great.
I started at 1.8
Yeah.
with St. George
They were
a long
high.
time ago. So I do my lendings through this company, and Harry that looks after me is who helped the team get the loans over. But it was because of everything I do with my commercial property is a lease doc, because my paperwork's not good. So because my paperwork's not good, I go down the path of a lease doc. But as soon as that ratio, because St. George Bank wanted a 1.8, as soon as Bank of Queensland came in at 1.6, I got a phone call saying, hey, like we can get you more equity because now there's a ratio. And again, it doesn't mean that you have to grab the equity you can have, but it's good to know it's there. And it's good to have, so when you see the opportunity, like Alpesh said, here's a farm that the farmer has let run down totally, but we've got a farmer who wants to grab it and work it, the money's there ready to go. Because I know you guys work with a lot of people in restructuring to pull out equity.
Yes.
Because most people here, I'm assuming, would have a investment at least. So
yeah, so with that, really good strategy is doing a refinance and equity release. So we work with about 70 plus lenders. So we do what you can do with residential investment, just say you've got a couple of residential properties. We do a scan of valuations across a number of different banks. So we will go where the highest, valuation is, because that's going to get, more equity out of that property. So just say you need, we're going to do $500,000 loan for you, but you're going to tip in, 300 grand of equity to help with the purchase. So that's a lot better than having to use your cash.
Yeah.
So really good strategy.
And talking to Harry the other day, he was saying some farms, if they're under 100 acres with a house, there's lenders that will treat them as an investment loan.
Yes, definitely. So that's a huge difference there. So, a habitable dwelling on the property, they'll do 80% LVR in that instead of 65. So, on $1 million property, would you rather 800K or 650? So huge difference in there, and not, having to.
And I think that's what
there.
Tunga, that's what you were saying. To know that, it's not easy to know that you can do that. So to learn the finance, to learn the leasing, to learn the farm type, the soil type, the rainfall, it's just not that easy to come across. And Alpesh and I haven't done this in 2 months. Like it's been almost probably 2 years of chipping away to where we now feel confident and comfortable to say, okay, we can grab, and the journey goes A, B, C, sit here, get the finance done, and away you go. So if someone's thinking, I'd love to do it, I don't know what I can get equity-wise, like Ryan's got a team of brokers. So Ryan is a promoter of the business in terms of letting people know we're out here doing stuff, but his team of commercial brokers are just amazing.
Yeah, really good team. And no cost to check the situation. So if you just want to come and say, hey, chat to Andrew first and say, we'd like some funding options on these 2 farms. We then run a full analysis for you, do the valuations, and then you can just see what's on the table. Yeah, you don't have to go any further than that. Yeah.
And even there was one farm we were looking at, and so Charlie's based in Canberra, in the Canberra office, and he introduced something to me. What's that belt called? In South Australia, the line. Yeah, no, the line with the rainfall. Gordon. That's it, Gordon. Yeah. Mate, that was about a year and a half ago. He introduced that to me. So there's a line that historically somebody said, north of this line is good, south of this line, the rainfall's no good, Yeah. And so by working with experienced people, not just in farming, but farm lending, we're always learning. And we can take that knowledge, work together, and package it up. So if anyone wants to think about that stuff, let me know. I'll put you onto the team. But Ryan, thank you for coming.
No, thanks for having me.
I appreciate it.
Cheers,
thank you. So, guys, I'll just quickly flick through now just some of the current stuff, and if anyone needs to go, you can get this from us later. But current opportunities. So these are just some examples. As I said, a lot of them are South Australia driven because we see an opportunity there, but this is 3,800 acres. A lot of it is, so when we say arable, it means you can work it. You can do stuff. It's not shrubs, it's not trees. It's 800 per acre. There's a house on it. The terms are 10% now, released, and you've got up to 3 years to settle. So those terms are really important because those terms is what gives you either the ability.
I want to say something on this. Look, 3 years, so it doesn't mean, don't ask for each and every farm, okay? There are very rare. No farmers will give you 3 years or settlement. This is something a regular talk and regular negotiation, and then we come to this mark, okay?
Yeah, so some people have got different situations, but those terms are always important because you want to give yourself a little bit of time, because I'm sure Ryan will say, don't come to me and say, I'm settling a farm in 6 weeks. Because to get the best finance deal needs more than 6 weeks in farming. Again, South Australia, 2.5 hours from the airport. These are really good of those introduction entry level. So you're talking 248 acres for $280,000. That's something, it's got a lease till 2029, but that's something that you can park your money in and let it be. Again, exchange with as little as 10%, 5% for this one, and settle in 3 months. You know, if you said, oh, I need 4, we ask the question, we try and make it happen. But again, it's not always in the millions. You can get into a farm for under 300,000. This is a larger farm. This is 2 hours 15 from Adelaide, 5-year lease at 4.5%. You can do a minimum lot size of 100 acres. At the moment, it's 4,000 acres. So that looks, ooh, wow, but right now, you're not going to go and cut that into 35, 40 lots. But in 15, 20 years, 100%, you know, and again, this one's a 10% and maybe 10 months to settle. You want to push 1 or 2 months, we could try and negotiate. But they're all a little bit unique because the situation of the land, the lease is all unique as well. In terms of, this one.
This one in Queensland.
Yeah, but I must have left Adelaide in the text. But this is Queensland.
Yeah.
Yeah, this one's got 2 titles already, lots of rainfall. There's machinery that comes with it. There's main power. There's a cottage. This one's got a 5x5 year lease at 5.5. So strong income, and again, good dairy. Good dairy. Yeah. So the others are more cropping. This one's a dairy example. So everyone's got a few different ideas. This is Victoria.
No, this is New South. Oh, Victoria.
Yeah. This is
Okay.
So this is a 5x5 year lease. Again, they've done a lot of timber clearing, and there's farms now where you can get the farms, and there's timber companies that will come. They'll do the environmental planning for you. They'll submit it. They'll come. They'll cut down the trees. They'll pay you for the timber as well. So there's situations like that. This is another one in Victoria. This is 5 million, which is a bigger ticket item, but it's in a consistently high rainfall. So there's certain areas where if there's 30 years of consistent...
This is because of dairy. There is a dairy infrastructures on it that's worth 2.5 million. So
that's
someone,
right.
Already dairy is on it.
Correct. But I'm saying if you've got 30 years of history of rainfall, then that you bank on that. Because when a farmer is looking at that, they're saying, I might not make millions, but I'm 100% recession proof. Because the long-term history means I'll be able to produce something. And those areas always demand a little bit more. And obviously, if there's existing infrastructure where somebody spent a lot of money, then they're going to be obviously wanting that money in return. One sec.
That's New South Wales, the last one.
Last one's, look, New South Wales, we know how expensive New South Wales is. So this is just over 400 acres. It's 5 k's from the township. Minimum lot size is 100 acres, so you might be able to get four lots. And we know even with hobby farms that are an hour from Sydney, you can't get them for under $1 million just for the land. You know, they're one somewhere around there. So this one is connected more to Newcastle because, again, you look at Newcastle and say, you could have business owners that want hobby farms there. There's a lot of opportunities. So in terms of the next steps, there's QR codes that you can scan. There's some questions and whatnot. But normally, if you want to proceed, there's an engagement fee. I'll put an asterisk on there because depending on the price point, it'll be the engagement fee as well. If you want us to go source a $10 million farm, then there's a lot more work into that than say a 500-600. But something, an average, it's 2,500 for us to then come up with a mandate. That mandate is what you're after. Now, if you come to me and say, I want something within an hour and a half from Sydney, it's got to be at least 200 acres and my budget's 1.2. I'm going to say, sorry, I can't give you that mandate because it doesn't exist. So we've got to come up with a mandate that's realistic for you, but that's also realistic for it to be in the marketplace. Then we sign off, we go away and we find that opportunity. We present to you no less than 3 opportunities that fit the mandate. Then if you say, I'm going to take it, normally we give 72 hours. Think about it, does it work? Yep. If not, there's other people, it's going to move along. But if you want to lock it in, at that point it's another 5,000 because then we're locked in and we're progressing. We start to finance, we start doing all the other bits and pieces. And then once we exchange within 30 days, the balance, so the average acquisition is about that 25,000 range. And then in terms of, I'll finish. I'm gonna finish off on this one section because it sort of summarizes everything, and then I'll show you some of the questions we need answers to be able to. Some of the questions is just to get an idea of what strategy you'd be open to, price ranges, time frame for purchase. Have you ever owned previously? That way we get an idea of if what sort of lead
There is QR
education.
code everywhere, outside and inside. You
Yeah.
can scan and just fill that details.
So all those little, they're just an entry point to give us an idea, to be able to, and then ideally what we do is we'll set up a meeting, you can ask all your questions, and then if it's something that works, we have an engagement letter and we start moving forward. But any questions now, now's a good time to speak up and,
Yeah,
I mean, it's a lot of information, yeah? It's a lot of information for something that's new. But if there's any questions,
If you have any questions, you can come with us.
5% economics of the value which you have.
Yeah. So some of farms, look, I don't want to put too much in it, but average you can say 4 to 6% you're gonna get. Some of farms you get 6% net rental income as well, and that increasing every year by CPI.
yeah. Some are as low as 3.
Yeah.
You know, if the history of production is so strong, so solid, and your preference is I want something bulletproof, long term, and with other benefits of maybe subdivision and whatever, you might only get 3%. But it's a balance of what everybody here's going to have different needs. Somebody's going to say, yeah, sorry, go.
So there are 2 kind of investments. So one is I invest everything out of pocket, and there's other things that I invest on a borrowed capital. So when we are talking about borrowed capital from a bank or vis-a-vis the other lenders and the companies, so what is the
It may be expiring in a couple of years. So how you are going to help find a
Look,
good leasing?
okay.
As a rate?
Interest rate you're talking? Okay. Look, it's definitely, he will answer, but what we got, actually I'm talking what we got, yeah? Rather than what we're paying now, that's the important thing, isn't it?
correct?
So I started with, yeah.
Figure out that
So first time I started with 7.02%, 2 years ago. Now it is reduced to 6 point something, 3 or something.
Yeah,
And again now 0.25 increase.
I'm at 6.48.
around 6.5.
Yeah, it's
Yeah.
totally depending on like what we found even. Some of commercial is a little bit higher than this, and we were ready to pay even 8-9% initially. We didn't realize that because the capital gain is very high, and then that was our mindset initially. But then we realized, oh, it's not like that. You know what I mean?
But let's say, for example, I'll give you another, we didn't talk about it, but Lending Association's got another affiliate business which can raise capital. Now, the rates are higher, but if you find if you want a specific opportunity, Australian Mortgage Fund, AMF, they can raise capital, but those rates are going to be between 9 and 11. Some,
Perfect for those ones where you're saying, I want that property within 6 weeks, we could do that within 6 weeks, but you pay a little bit more.
True.
so we're not saying that's what, but we're saying in terms of solutions, they're very broad. But if you're looking at something just to grab hold with the lease, if you factored in 6.5, and I reckon after the inflation data yesterday, I think there'll be a hold in March, and then there might be, if it doesn't back off at all, there'll be an increase in May, and then it'll start to back off, because what the media reports is not the truth. They try and scare everybody. They were saying, oh, the trimmed inflation. Did everyone hear that the trimmed inflation came in higher than they expected? Did everyone hear that? So last month and this month, go to FX calendar. FX calendar gives you all the announcements, okay? The trimmed inflation for both last month, this month, was below forecast. So the previous month was forecast at 0.3, it came at 0.2, it was 0.4, came at 0.3. So for 2 months in a row, it's below the forecast, yet the media is telling us it's very bad. And if I look at 0.2 and 0.3, and I average it over a year, it gives me 3%. So it's bad, but I don't think it's as bad as they just like to sell newspapers and get clicks.
I like the proposition of baby boomers retiring and can buy valuable land.
Yeah.
But the question is, so the demographics, who is taking over those leases?
So there are young farmers.
Yeah. So my question is more: is there a data metric that you look at to assess the demand?
Yeah. No. So there isn't any data set that's going to go out there and say how many young farmers are out there trying to work the land. But what I can guarantee you 100% is the land will be worked. So if it's not worked by a local young person, they will bring them from overseas. So you're not going to have farmland that can produce dairy, fruit, nuts, and not be worked. So what we've found, though, we've been very fortunate. We've found a lot of farmers between probably 35 and 45 who really have, on top of farming knowledge, they have business acumen. And they've realised that I can run, so how much does Greg run? How many thousands of acres?
Greg runs around like more than 100,000 acres.
So this
He
one
owns
guy's, what is it,
65,000,
38?
More, less, 35.
Like he's mid-30s and he runs like 100,000 acres. It's
Sixth
crazy.
generation Aussie farm.
Yeah, but he's now thinking, I can't buy all this, but I can grow them. So he's looking at a particular territory and he wants to run all the farms because he can. We've got another guy in Victoria who's saying, I want to start a service when the older farmers get too old, that we have the workforce to come in and run the farm for them. Because a lot of them want to stay on the property, they just can't handle it, it's too big. So we've been very fortunate to be connected with farmers that are third, fourth, fifth, sixth generation, but they've got business acumen and they're looking to structure it. So
I want to answer this in a way because most of the people's background in India, and how we look at their 2 acres, 3 acres, 5 acres max, and you have a boundary. Yeah, it's very hard to get the machineries on it, isn't it? Here, the person who's running 100,000 acres have a 10 to 11 people staff only. He's running with the machineries, all the machines, big machines coming up, and they're running. So it's a different ball game entirely. You need to understand that.
Yeah, but you're right. There's no metrics. There's no. Yeah.
We can talk a lot about. Let's say there are. Oh yeah, please.
What are the costs associated with transfer of land charging was same to same.
associated with transfer of
Compared to
Yes,
residential
yeah.
or similar or less?
No, it's very,
Similar.
very on par.
Similar.
On par, yeah. So there's no, and then it's very much on par. The only thing is if you set up a farming business and you can show that you've had that business for 15 years and you're over 55, there's actually no capital, like you can avoid the capital gains tax.
If that makes sense, I can clear a little bit more.
Okay.
Look, generally, we buy a residential. You sell a residential example. Let's say you bought something 500, you sell for 5.5 million in future. So you make like 5 million profit on it. So technically, 50% is right now a discount, yeah, on capital gain. There's going to be maybe a lot of talks going on.
A lot of talk.
In farmland, if you're really running a farm by yourself, that's your business, and up to 6 million profit, there is no capital gain tax.
What about in your
As an investor,
council charges?
That's nominal. Look, that's generally tenants pays. If you're owning by yourself, just giving you our own first farm, like around 6,200 acres, and that farm pays yearly $5,500, a council rate.
I think he's talking about the total holding.
Yeah, that's the only thing. That's the tenant.
Can give us an like ballpark figure.
Look,
on, yeah.
Let's say 300 an acre. What's my holding cost?
So if it's 300 an acre, it's still going to be a little bit determined on how big it is too, because when it's a little bit bigger, there's some rural fees based on sizing. So, but what we'll do is we'll sit and we'll give specific examples to say, you know, on a 300, it'll be X. I can tell you mine in New South Wales. I can't tell you every state off the top of my head. We've got to go get the calculator, but everything will be mapped out. There'll be nothing that's ambiguous.
look, so far, whatever, 100% farm we bought it so far, we're not paying any outgoings. That's it. Because I negotiated in a way.
What's a commercial lease?
Yeah, the lessee will pay. That's a commercial. But yes, sometimes the lessee says, no, I'm going to pay you 5.5 or 5. I don't want to pay anything. The farm is good. And you agreed. And you have to agree on that if you like that farm. You know what I mean?
We try our best because it's commercial basis.
That's the terms.
Does anyone own commercial here? Anyone own commercial property, baby? Yeah, you do. Your tenant's paying the outgoings on, yeah. So it works like that more, but everything will be outlined.
If you are a farmer and let's say not investor, but if you are a farmer, then income tax is 5 years average. That is good to know. Thank you.
Thank you so much. Yes, and all the states are a little bit different as well.
Every 100 acre, I'm talking about at 5%. I'm talking about a
Yeah.
return of 15 per acre. Right?
Yeah, 5%, yep.
15.
Yeah.
$15 per
Yeah.
acre, yeah?
Yeah. So what percentage might be your outgoings?
My outgoings is my holding cost.
Yeah, so your holding costs, so if we look at holding costs, you're talking potential management fee, potential council rates. Sometimes there's special bushfire, like
emergency
fire,
fire
like
service
emergency
levy, yeah.
rates. There could be a land component, but it's not. Every state is different. So, but it's not crazy. It's not going to be. If you factor in even with the management fee, it's not going to still be more than 8%.
And
Of that 15.
Yeah, of there.
yeah. So generally, look, when we make a deal, when we make a mandate, this is the part of the mandate.
Yeah, 100%.
We will ask, look, if you're asking something, I want
You,
year only.
you can say, I don't want my outgoings to be more than this percentage.
So-
And that's a criteria to select
the farm.
the farm.
Yeah. So
I don't. So the question is, do you need to have insurance as a landlord?
I don't think so. Why you gonna take this? That they have an insurance. Now you again on top of the
Look,
insurance.
what I've done is I've inquired with insurance companies for specialized insurance because what we might want to be looking to do is how can we protect the income even more? So as a landlord, for example, of a residential property, you have landlord insurance. And if something goes, so because it's such a niche, there's no product out there, but I am talking to two specialists. So has anyone gone to a golf thing where if you get a hole in one, you win the car? Has anyone even heard of that or seen that or no? But like imagine that you go to a golf thing, if you get the hole in one, you win the car. The golf course doesn't buy the car. They buy insurance, and the insurance company gets an actuary to calculate what's the probability. So I'm asking them, work out what's the probability of something going wrong, and can we offer a product?
Like the tenant is actually growing some valuable crops, say for example, and he wants to pay genuinely the lease and everything, and then there's
A cyclone.
an event,
Yeah.
like a flood or bushfire or something. So if that's that moment, he might say, I'm nothing to,
Yeah. So we can stipulate in the lease that they have insurance to protect themselves.
I'm answering that.
Yeah.
Look, all of our lessee tenants, they have insurance. Imagine if I have 3 titles on one farm, each title have $20 million insurance, and they're paying insurance policy. That's how it is.
for the crop or
For the
Whatever-
crop,
whatever
but
happens.
maybe one
do
of the
this.
workers falls into the machine and dies.
oh yes, like a
Anything,
Yeah.
anything. Go ahead, please, Vishalji.
But if the lessee himself goes bankrupt, even there is a 5+5 lease, and he goes bankrupt, what happens? There's no insurance.
Yeah, so the question is, what if your farmer goes bankrupt? If your farmer goes bankrupt, there's nothing left really. That's it, you know. So if they go bust, then you're left with your farm and reletting the farm. But
If anyone goes bankrupt here, we can't do anything.
yeah, but the most important thing is these farmers are mostly generational farmers. You haven't seen communities that help each other more than the farming community. They're always
I don't
supporting
think
each
so.
other.
I haven't heard any farmers gone bankrupt, but we heard a lot of developers gone bankrupt.
Look, I've heard of one of the wineries that was selling a lot to China, and then that contract got done. But what I'm saying is, and I'll come to you now, but what I'm saying is in terms of them going bankrupt, the community is super supportive. And second of all, I assure you, they will work that farm to its full capacity before that happens. So at least you'll be able to release it
Andrew,
as a full working.
The guy I want to ask first. Sorry,
Right,
man. He was- then you can ask, please.
Can we buy properties under trust? Because I have a trust structure where I own commercial as well as residential properties. So can I use that trust to buy farming lands?
Yep.
Yes. Look, yes, but still, we don't want to answer like as an accountant or as a mortgage broker.
No, but that's all right. Factually,
But
you
yes.
can. So we don't want to get into financial advice, but factually, yes. Factually, you can, 100%.
Yeah, you can. There are so many structures.
I've got one in a family trust, so you can definitely do a trust.
Yeah.
Hi, thanks for the presentation. So when compared to residential and commercial lease agreements, so is there a security deposit for
Yeah.
the farmers?
I'll just
That's question one.
Yeah.
And there's a second question, like what is the minimum deposit which bankers expect us when we are trying to propose?
So the question is, with the lease, is there a like a bond? So when you have a residential, there's a bond in place. So is there? And then second of all, how much money are you putting in out of your pocket to action this?
I'm answering that.
Yeah.
Look, in residential, in commercial, what's the difference? Like my farm, we have a advance rental income for 6 months. So when the year start, we're gonna get like 6 month lease first. Imagine in residential, how much bond is? How many weeks bond? 3 or 4? 4 weeks bond. Yeah.
And
we got
and you
26
can't.
week bond.
And if your tenant, you might not know this, but if your tenant ever pays in advance beyond that, and they ask for it back, you have to give it to them.
So here, how you negotiate, yeah? Minimum, what I feel so far, like 3 months. Some people like 3 month advance, some 6 month advance. So it's not something a deposit. You got already 6 month deposit, 3 month deposit. What else you need?
But we can negotiate too. So
Yeah,
it's part of that. That'd be
the
part of the mandate to say we want to get at least 3 months ahead. So that way we've got some buffer that we can go find somebody else and do that. In terms of money that you're putting in, it'll depend on, so if there's the lease and the lease is strong, normally lease stocks are they're about 65%, Ryan? So you're putting in 35% for a lease doc. And the good thing about that is you don't have to have every piece of paperwork up to date. The other opportunity is if it's under 100 acres with a dwelling and you get it as an investment loan, then that's 20%. Or if it's more of a specialized situation, you might have to put up to 50 maximum.
Yeah, look, I bought my first farm with the syndicate. There's a 55% deposit we paid. That's a lease doc loan, because when you have a syndicate, no one wants to take responsibility for everyone. So, you know what I mean? Like if you are a managing director or you said, okay, I use my name, but I don't want to use my borrowing capacity. That's how it's worked.
And again, guys, anything, there's the QR code, you can scan them.
Yeah, anything if you want to
organize
talk.
yeah.
Yep.
So if you buy, what is the same charges?
Yeah, 100% is the same. Like our fees are structures under $500,000, 20 grand total, up to mil 25 grand total, above a mil 2.5%, and above 5 mil different. So it's totally depend on how much acquisition is there. Yeah. Look, syndicate means
There's
4 to 5 people together when they want to do something. Yeah. Like imagine you want to do something, but you say like I'm a little bit short, or maybe I have money, but I don't want to put money because you back in the mind you feel a little bit fear. So you think like better to have another family or 4 or 5 friends together. Let's say 5 friends together, everyone have a 20% share. That's called syndicate.
But I mean, is it we have to find those, or you have?
Oh no.
So there's options. There's options. So one option is to say I've got 2 or 3 friends. I've got a good friend, a cousin, a brother-in-law, whatever it is, and we're going to create a unit trust, and we're going to take units in that unit trust.
Generally, how I do this, look, I'm preferring if you have your people, I can talk to them, yeah? But I deal with one person only. Out of 5, 6, 10, whatever numbers, we can't deal with 10 people. But if I have to bring 2 people from this side, 2 from here, look, it's still doable. But when the opportunity is on that level, we'll do that.
Yeah, sometimes when we do that, because we buy as well, yeah? We buy trade farms as well. So maybe it's an opportunity where we say, hey, we've bought here, there's another one, we like it, maybe, and then we can put it out there to the database and say, does anyone want to come in? That's an opportunity as well, you know? So it's better, like Alpesh said, to do it with people you know in the beginning, then you get a bit more comfortable. But it was funny, my first business partner was here before, and he's 30 years older than me. And he's the one that taught me, always do things with people and diversify. Because he said, on your own, whatever you do, you're going to put all your eggs in that one basket. But if you can spread here, something's going to come off, you know? So I'm not saying everyone do a syndicate, but I'm saying that it is a good way to get, because why are we looking at this opportunity? Because everyone sitting here has realized, I don't want to buy the end product. I don't want to buy a product that somebody else has bought, somebody else has DA approved, so they've added value to it because they DA approved it. Somebody else got the construction certificate, somebody else built it, and now I'm buying the end product because now I can't add value to that. That's why most of the people are sitting here now.
They're just waiting for the market work for them, isn't it?
And so what we're looking at is those opportunities where there is still value to be added, be it because there's subdivision potential, be it because, so when you get to the entry level, again, those 284,000, those ones you're going to wait maybe a little bit longer to see the full potential. Whereas if you were to buy, say, 6 of those as one lot, you're not going to be paying 1.35, 1.4, you might pay 1 million. But because not everyone has that much capital, the larger the acreage is, the lesser the rate you're paying is.
Look, this is something we need to understand. Let's say you buy 100 lots subdivision. The cost to buy 100 lots subdivision and cost to buy a one lot, I think it's a double price difference, isn't it? Similarly, in a farmland, when you buy 10,000 acres, 1,000 acres, and 100 acres, the price difference is 3 to 4 times. So that's an opportunity, you know, like that's why we're saying like that we find out some opportunities where 4,000 acres, let's say $600 an acre, yeah? Now, when we start selling that farm for, let's say, 400 acres, then definitely the price would be around $1,000.
But not everyone's comfortable
Yeah.
in the syndicate. So if you're comfortable with the syndicate, and you can say, hey, if there's an opportunity, let us know, and then we can communicate.
Yes. Go ahead.
We've got questions on number of properties. For example, if you choose, you want to go for 800K to 1.5 mil. So I know it's not like residential in hundreds of thousands of property, you know, you can offer. So what's the frequency of property? For example, like you get like 2 to 4 properties every month or something?
Yeah, so that's what I was saying. At the moment, we can comfortably cater for 4 transactions a month at the moment. Now, if we can expand and do because a lot of those opportunities now are coming off market. So the more that we're expanding our network, the more, so we've been told, for example, that in certain parts of South Australia, so as Alpesh said, when they calculate the farmer's income, they calculate it over a longer, they don't do it every year. So when they do the finance for the farms, they also give them a longer period. A lot of the farms are coming up for a renewal, and we're hearing that the banks may not renew the full amount. So they might say to the farmer, listen, you've got 1,000 hectares, go sell 200 of them, because we're not going to fund you, we're not going to roll over that amount. We want to reduce it. So they're going to call us now, and we're starting to network with the banks. The banks are going to call us now and say, hey, we've got a farmer that needs to get rid of 200 hectares. Great. Is it good? What's the opportunity? How do we, So we believe we're going to be able to expand and cater for more. But right now, like I said, it's not something on every corner.
It's not something to find out the house in the corner of Queensland, suburbia, and find out the tenant. It's like a niche product. We don't want to do even too much as of now because Andrew busy, everyone busy, but definitely that's a patience. We want to do this much more over the time.
Thanks, Alpesh and Andrew. Thanks for that. I have a question. Let's say we are going to do 5-year lease. It may be expiring in a couple of years. So how you are going to help to find a new leasee after 5 years? Are you going to help in that sense as well?
We're 100% committed to this venture. We think it's very good timing in the play for everything, in our opinion. So one, I think the distrust of government is increasing every week with this government. So that distrust is going to push more and more people to land holding. So that's, I think, very positive for this sector. Like we said, it's a reducing commodity. So again, more people are going to want to get in. So we really believe in this, and we see lots of longevity. I do a lot of activity, as Alpesh said. I consult to New South Wales Planning. I consult to several developers. My dream is in 12 months to be saying, you know what, so the network we're going to build should be so strong that we should have a waiting list of farmers to lease our farms. Because everything we do has to be win-win. every relationship, if you do win-win, then there's a saying that says, if I give you, and I give you, and I give you, at some point, you're going to say, oh, I've got to give back, you know, because he's giving, and if I don't give back, then maybe he starts giving somewhere else.
Look, leasing, how it works here, I can tell you. Imagine you leasing farm, yeah? You're spending a lot of money for plowing, managing stuff, sheds, blah, blah, blah. Now, at the end of 5 years, as a lessee, what do you think? You 100% try to get that farm with you. So that's not your look after as a landlord. Generally, lessee wants that farm. That's why the option with them. No one leave this. Out of maybe, let's say 100, 5 or 6, definitely they want to retire. Or they tell you before, even 1 year, 2 years before. So we need to ask ourselves, let's say, if you're not buying farms and having a house, what are you going to do in these situations? No one can give you for 5 years lease guarantee, 10 years. Look, couple of years is enough. Then everyone look after by themselves.
But Sandalwood at the moment, we've got 2 farmers that want.
We have 2 farmers that want to take a lease. Even the other farms as well. We didn't.
Let me tell you how it started, because it's a funny story. Yeah, I'll tell you the story very quickly. So we were just building the network. So Alpesh found a website where farmers would share equipment. I've got a tractor, I've got a bulldozer, blah, blah, blah. And on that, he started to get farmers to say, we want to lease, we want to lease, we want to lease. And we realized there's nobody out there offering farms to farmers to lease. And there's a huge market for it. Crazy. Sorry.
Hi. The question I have is in terms of finance things, is it like, do you have a minimum requirement that you need to have 20%, 30% on hand, or like in residential you have a LMA option so that you can go up to the max?
We discussed that, but again I'm repeating. Look, under 100 acres with the infrastructure zoning, it's considered as a normal 80% to 75% FER. If it is over 100 acres, like 1,000, 2,000, 3,000 acres you buy, and you have people,
that's a different structure with the, let's say, up to 50% LVR. But if you're buying by your own, up to 60 to 65% LVR. That's how the lining works. And if you go with the lease doc loan, then lease doc loan works in a way where they're not using your borrowing capacity. They're just using you as a guarantor.
But yeah, there's no LMI option or anything.
Big things. I don't know if anyone understand that. So you bought a farm, like I bought a farm, 11 people example, I'm the managing director. If they use my borrowing capacity worth 3.5 million, I can't buy anything else. You know what I mean? It's not like that. There's nothing on your book. You can do whatever you want to do other side.
I'll say one more question if there is, because I know everyone's. But is there any other questions or?
We can sit personally
outside.
Okay,
cool. I thank you everyone for coming. Hopefully it was interesting.
Thank you.
Everyone learned something. It's something different. We're excited about it. And any questions, let us know.
Thank you,
thank
Tanga,
you.
and your family.
I appreciate it.
Thank you,
Thank
Kiran.
Nice meeting you, man. Yeah. Thanks for coming. Thanks for coming, guys. Yeah. Did you have another question too? Or? No, you're right. Cool. Thank you. Yeah. Any questions? Thanks heaps.